Let's review the coverages for a second. Now, it's very important for you to understand the coverages and for you to know how to explain them. So let me review a couple steps. Step number one is the introduction. Now, within the introduction, the purpose of you explaining the coverages is to let the customer know that your goal is to educate them, to give them all the knowledge, to give them all the information, for them to know what coverages are available, for them to understand exactly how they work. So by the time they leave, they have no clue, no reason to doubt the coverages that they have. And they have absolutely every single detail regarding each category. Now, the second factor of the introduction would be letting the customer know that we're different from the rest of the agencies. Every agency simply wants to give them numbers, collect their money, and do the paperwork, versus what we want to do is we want to educate them. We want to give them as much information as possible. So, introduction. So you tell your customer, look, Mr. Customer, one of the good things about family insurance is the fact that we're going to review all the coverages. Matter of fact, I'm actually going to spend roughly around 5 minutes. My goal is to give you all the information, to give you the details of each coverage so you know exactly what options are available for you and you can make the best decision. So by the time you leave, you know everything about insurance and you know exactly what coverages you purchased. So just in case you're involved in an accident in the future, hopefully not, but just in case you are, you know exactly what coverages you have. Now, another good factor about us reviewing the coverages is the fact that we actually take our time. We care about our customers. The majority of the agencies, they're not going to do this. Matter of fact, they're just going to give you numbers. They're going to do the paperwork, and that's it. They don't care about giving you explanations. We do. We want to make sure you know absolutely everything about insurance. So let me go and explain the six different type of coverages. Number one, basic liability. This is what the law requires. So if you get pulled over, a police officer is going to ask you for liability. Now, liability covers the third party. So just in case you're involved in an accident and you're the one at fault, your policy is going to cover the other party. Your policy is going to cover up to $15,000 worth of medical payments, up to $30,000 worth of medical expenses, which means it would cover all the passengers and the driver in case all of them are injured, and up to $5,000 for damages to the property or damages to the car. Now, once again, basic liability. This is what the law requires. The DMV could also suspend your registration in case you don't have the basic liability. So basic liability is mandatory by the state of California. Now, uninsured motorist. Uninsured motorist is an additional coverage which is connected to the liability portion of your policy. Now, this coverage actually benefits you. If someone hits you without insurance, so just imagine you're driving, someone runs into your car, someone hits your vehicle, and they don't have insurance, automatically this coverage will kick in. This coverage will benefit you, and it would cover you since the other driver had no insurance. Now, it doesn't cover a hit and run. So if someone hits you and they leave, that wouldn't cover it. Matter of fact, the only thing that would cover a hit and run will be collision. We'll talk about that in a couple seconds. So uninsured motorist benefits you if someone hits you without insurance. So the way it works, it covers up to $15,000 for your medical payments, up to $30,000 for all the medical expenses, technically for your passengers or your family, and it covers up to $3,500 for your vehicle. So if someone hits you without insurance, as long as you have the license plate number, just in case they leave, but if you have the license plate number, your insurance company is going to confirm to determine if that vehicle had insurance, and if they didn't have insurance, your policy will cover it. Now keep in mind, 30% of the drivers in the state of California, possibly even more, 30% of the drivers in the state of California are driving without insurance. And let me tell you 3 reasons why. Number one, new vehicles. Every time you purchase a new vehicle, and I don't necessarily mean a vehicle from a dealership, just simply a car in general. When you purchase a car, it doesn't come with insurance. So until you actually add it to your policy or you open up a policy for this vehicle, you're driving that vehicle without insurance. And there's thousands and thousands of cars that are being purchased every single day. Number 2, late payments. Every time your payment is late, your policy is either canceled or at least the coverage is going to stop. They're not going to give you any coverage until you make the payment. So until you actually make the payment, you're driving without insurance. So we have thousands of clients that are making late payments. So within that time, they're driving without insurance. Now the third category, which is not too common, but it's still a good factor, are customers that they really don't care about insurance. So they're driving without insurance. They don't care if they get pulled over, if they're involved in an accident, whatever it is, they really don't care. So these three factors, new vehicles, late payments, and customers that don't care, that creates or that calculates to be about 30% of the population in the state of California. So uninsured motorists is very, very essential, something that we highly recommend. Now, the following coverage, comprehensive and collision. Comprehensive, to summarize it, it covers vandalism, theft, and fire, which are the most common losses within California. So once again, vandalism, theft, and fire. Now, you would be responsible for a deductible, which we'll talk about it in a second. Collision. Collision covers any impact, a hit and run, you crash into a pole, someone hits you and doesn't have insurance, whatever it is. Collision covers any impact. Now, you would be responsible for the deductible. The way the deductible works, you would either choose a $500 deductible or $1,000. The higher the deductible, the lower the payment. The lower the deductible, the higher the payment. So we usually advise our customers to at least go with $1,000 to make their monthly payments a lot more affordable. Now, in case of an accident, the insurance would be responsible for the claim, but they would require the deductible up front. So that means you would have to pay the first $500 or the first $1,000, and then they would cover the rest of the damages. The following coverage is called higher limits of liability. Now, these higher limits of liability is just simply adding more than the $15,000, $30,000, and $5,000. So this is something that it's requested by maybe a business owner, a homeowner, or a vehicle that's being leased. Sometimes the lease company requires $100,000, $350,000. Now, the reason why business owners and homeowners choose higher limits, because if they have a lawsuit, they have enough coverage to cover the claim. See, the thing is, there's a lot of people out there, negative people, that they're going to try to take advantage of the situation. So if they know you own a business, they may go after your business. So by increasing the limits of liability, you reduce the chances of being in a lawsuit. Now, the following one is medical payments. We truly don't really offer too much medical payments. Companies offer medical payments per person from $500 to maybe $1,000, $2,000, but it makes a lot of a difference on the monthly payment. So we usually don't advise them to choose medical payments. Either way, nowadays there's health insurance, medical insurance. So there's other methods to accommodate these medical coverages, at least not through your insurance policy. And then we have the rental and the towing. Now the rental, the way it works, companies usually offer $20 for 30 days or $30 for 30 days. All it means is if they have full coverage, first of all, you need to have full coverage on this vehicle, and you're submitting a claim. That means either you were involved in an accident or your vehicle got stolen or vandalized, but it is going through a claim. Then they offer those $30 for 30 days. So that means you can go to an agency and get a vehicle that's worth $30 or less per day, and you have coverage for 30 days. Now, roadside. Some of the companies offer roadside, which offers locksmith, tire replacement, gas replacement, and towing. Now, towing up to 15 miles, and it's up to 3 services through the course of the day. So give them these coverages, give them these explanations, and then ask them what coverages would you be interested. At least by giving them some sort of explanation, at least you're allowing them to understand and to have an idea of the coverages that are available for them. They're used to just going with basic liability or just simply give me the lowest, give me the lowest. So now your goal is to educate them so they could actually choose what option will be the best one based on the coverages and the benefits.